All right. Thanks, Toby. Thanks, Beck. This is where the fun starts for the day. Unfortunately for you, the downside is you're going to see me 4 times today. You'll probably be sick of hearing my voice, but I'm here to challenge you to think. For those who thought they were having a day off work today, your day has just become a little bit harder. You're going to have to communicate, you're going to have to interact with members of your table. So if there's anyone on your table that you don't like, maybe ask them to move. Here we go. Interesting comments obviously came out of the first session from Dan, so I'm intrigued how Dan's table goes. I'm going to challenge the thinking that advice is the most important piece in the process. Just throw that out there. I'm going to talk a little bit about asset allocation. Clearly I represent a fund manager. Clearly we think the investment piece is rather important. But more importantly, I'm going to talk about asset allocation, why asset allocation matters. And probably the most important piece, unfortunately, in this industry at the moment, is that the risk profile, 4 questions that we ask every client that walks through our door, is actually probably the piece that drives the most important outcome for client returns. Obviously today we're in a very interesting environment where if you're a conservative investor, let's just call it my mum, you are basically loaded up on bonds, which we would argue is just about the highest risk investment that you could be in today. So the asset allocation decision, or the risk profile decision, actually, I would argue, dwarfs any decision that gets made right through the whole process. Now, before I start the game, I'm going to talk about a few things. The obligatory death by disclaimer. Hopefully you can't read that. It basically says everything I will say today will probably be wrong. But hopefully from playing the game we can find some insights into some of these asset allocation decisions. So why does asset allocation matter? Ultimately, and I can't even read that, the asset allocation decision drives a lot of portfolio returns, and it can be a very important goal in determining the portfolio, or ultimately that conservative or more growth investment. Shares ultimately are the best way to build long-term wealth. We all know that, but clearly that comes with some volatility, some risk, drawdown, whatever you want to call it. Peak to trough through the global financial crisis, I think we all know too well. It's 10 years ago now, but certainly in recent memory, 47% drawdown for the Aussie equity market. So you do need to, ultimately, you can compound wealth, you can find certainly greater returns by taking more risk, but you need discipline to cope with those significant drawdowns. Rule number 1 of investment management is diversify. So if we take a very simple balanced portfolio, which is just simply building a 60-40 portfolio out of indices, there's no smoke and mirrors in here, there's no portfolios, there's no active management, this is just purely a passive, let's call this the Vanguard portfolio. This is effectively a 60-40 balanced static portfolio, diversify, similar returns and a smoother path. That's effectively what is referred to as the one free lunch in investment management. If I switch to the US share market, so similar period, similar drawdown experience through the financial crisis, this is what everyone wants, right? Straight line. There would be no greater feeling than to go to every single one of your clients every year and tell them that their portfolio has increased from last year. Not only did it do it year on year, it did it quarter on quarter, it did it month on month, did it day on day. Does anyone know what the green line is? Fairfield Century? Anyone know what it was? You are the first person to ever get that question right. I normally add another data point. Sometimes I find someone works it out with an extra data point, but clearly it didn't end well. Fairfield Century was a $65 billion Ponzi scheme. Fairfield Century was the feeder fund into Bernie Madoff's scheme. Clearly, if it looks too good to be true, it often is. Now, with that overview, setting the scene, this is how the game will work today. I'm going to ask again, anyone who is not sitting on a table, please join a table. You need to be on a table to make this work. If we don't have people on tables, the tables can't compete. So please come and join. I know you're ignoring me, but I'm going to keep telling you to join a table until you do. So each table will work as a team to discuss how to invest across asset classes to best meet your investment goal. We'll use 3 real periods of history, each over a 3-year investment horizon, and using information that I'm going to give you, you're going to construct portfolios that you believe will achieve the goal that I'm going to set you. Our goal is to generate an inflation plus 4% return, and the objective of which is the objective of a typical static balanced portfolio. Now you can debate whether this is 4, 5, whatever, but let's just call it inflation plus something. We will also be considering risk, how volatile the performance and what level of drawdown, peak to trough losses, your investment portfolio gets along the way. So what we're trying to do is ultimately beat the typical 60-40 portfolio, or let's just call it the robo-advice solution that is available for arguably more expensive than what you pay for financial advice, but that's a different debate. Anyway, at the end of 3 periods, we'll look at the performance, and then we'll aggregate over the full 9-year period. Needless to say, this is easy at the start and it gets harder. So the overall winner, the table, will win a prize. I did this to the who's who of the institutional world down in Torquay, the i3 conference. Future Fund, all the wonderful Host Plus, all of those guys were there, and I was giving away a plastic trophy. Here we have a slightly better prize. There is a trophy, and it's certainly worth playing for. So the winner, there'll be a winner of each round, and then the overall winner will be the winner of the 3 rounds, the total 9-year period over the time frame. So, how does it work? Round 1, I'll go quickly through these. We'll start out simple. We have a 3-asset portfolio. All you need to do is build a portfolio out of Aussie equities, Aussie fixed income and cash. That's going to be round 1. I'll give you some information and you're going to build a portfolio on that basis. In round 2, you're going to get more choices. We now start adding global assets, but we don't start thinking about currency. But in round 3, you've got 10 assets to choose from. You've got small caps, you've got currency decisions, you've got high yield, etc., etc. So, the goal is to provide portfolio allocations, and I'll remind you about this throughout the day, portfolio allocations to achieve inflation plus 4% return over the coming 3-year period. So we're effectively trying to build a portfolio to deliver inflation plus 4 over the next or the subsequent 3 years. But you've got to do it while minimising volatility, and you've got to limit capital drawdown. Very important point. The team ranks are going to be calculated on a 50% weight between return and risk. So the drawdown and volatility measure are going to be equally weighted, and then the return measure. So effectively half of your ranking will come from risk and half from return. Now this is where it gets interesting. We are in a large group. There are close to, if not more than 200 people here, and we've got, I think, about 20 tables. One of the wonderful parts of this industry is something called peer risk. If you look at a lot of the industry funds, you look at a lot of this industry, everyone basically does the same thing. If you look right across every portfolio, and Host Plus excluded at the moment because obviously their portfolio is not a balanced portfolio or a growth portfolio, defensive portfolio. But the reality is if you look right across the industry, most portfolios end up looking the same. The whole industry effectively looks like a balanced fund. So we're all very worried about peer risk, mainly driven by, there's a few consultants in the room, so be careful what I say, but let's call it performance surveys. You don't want to be top and then bottom, right? As an asset manager running a lot of money, Ultimately, we're targeting to be second quartile. You don't want to. You want to be better than average. You don't target to be the best all the time. It typically doesn't end well. You typically go from best to worst to best to worst. That doesn't work for clients. You want consistent outperformance through time. So that's what we're trying to do. So this is the extra dimension. I will calculate, through the technology that we're using, I will calculate the median manager or the median table. What you've got to do is beat the average of this room. You've got to beat the average of the peer group, okay? Or, as I'm saying here, what you can't do is underperform the peer group by more than 5%, i.e., if we think about this in the industry, if you're underperforming your peers by more than 5%, you're not going to have a business. Hence the rule. The other point is, if you go through a financial crisis and you lose your clients a lot of money, you experience a significant drawdown, you're also not going to have a business. So if you experience through any one of the rounds a greater than 20% drawdown of your portfolio, I'm going to fire you. So, with that happy note, the last point that I will add, but I don't actually need this anymore because when we first did this game up in Fiji, we did it on paper, and needless to say, people couldn't count. So the technology will not allow you to enter portfolio allocations that don't add up to 100%. So I've taken that minor complication away from you. Right, with that in mind, what we're doing, just to give some clarity, is each table needs to nominate a team captain. That team captain has no other responsibility other than to enter a few numbers into a web-based application. It's not hard. And you need to write the team name on your tables in orange letters into the app once. That's all you need to do. It's just important so that I actually can work out where the tables are, that you use the team name on the tables, and please only enter one portfolio entry, one team entry. If we start entering lots, it starts becoming a bit messy. It's messy enough as it is with this many people. So one team per table, one team captain, and you need technology. You need a phone, or an iPad is probably the best way to do it, or a laptop is even better, because the bigger the screen, the easier it is to see, but it will work on an iPhone. So please find someone who's got some technology on your table and nominate that team captain. What that team captain will do, so here we go, this is a fixed income team. Sorry for you guys. This is the bond team. What you're going to do is either hold your iPhone over the QR code, it will pull up a web link, click on that web link and it will open up the website. If you don't have an iPhone and you've got a, as I say on the thing, if you've got a Android phone, you need a QR reader, or resort to technology and type in tiny URL, etc., IMAP, asset allocation game. So can please someone do that on the table, nominate a team captain, and I will activate the round. Okay, here we go. You can work out the technology. There's a few people wandering around the room that will help you with the technology. This is the information that I'm giving you for the next 3-year period. You only have 7 minutes, not 10. But having said that, this is the easiest round. So, bearing in mind I can't read this, I'm going to jump off the stage and I will read it to you. What I'm giving you is the past 12-month returns for equities and bonds, and I'm also giving you the current yield of both of those assets. GDP growth is slowing at 2% and lower than a year ago, while inflation has doubled over the last year to 5.1%. Interest rates have been raised 3 times over the past 6 months and 2.5% higher than a year ago. The 10-year government bond has fallen 2% over the past 12 months, and the stock market has done very well, and the valuation of the equity market has climbed from 18 to 22 times. That is all the information I'm giving you. You now need to build a portfolio of 3 assets: Aussie equities, Aussie fixed income, and cash. Easy. Please start. Please discuss. It's open. So if you were already in the app, all you need to do is refresh it and you'll see, just go to round 1 and you will see the same information in your phone or laptop. So 3 years, next 3 years, inflation plus 4, minimise volatility and drawdown. Mate, I expected better review.
The 10-year government bond doing 4.2% over the last 12 months. In the table it says bonds past 12 months return 21%. So what bonds are we talking about? All right, okay.
Yeah,
So,
exactly.
But the bonds you've got on the table, the bonds we can use, are they also 10-year government bonds? Or are they just
That is the bond index. Huh? That's the bond index. Oz bond index. Oz bond index.
You said the 10-year government bonds go on 2%, you mean the yield? What do you mean the...
Yield. Yeah, yield on the bond.
It's actually working so far.
Yeah.
So it would help us to try and pick the year? Is it?
Yep.
So it's been...
Yeah. Yeah.
384?
So, a couple of questions. This is the assets that you're getting on, that you're exposing your portfolio to are the ASX 200 and the Aussie Bond Index. And it's only domestic assets that you're building portfolio out of for this round. And this is live, this is real data. This is a real 3-year period. Okay, just conscious that we're starting to move into morning tea time. Please start trying to form a decision and enter your portfolio allocations into the app. Once you've done that, please feel free to move out to morning tea. Is that right?
Will they close it off at a certain point?
I can see all the results coming through. Okay. So once everyone's in, I mean, obviously we want everyone in, but it's up to them. They want to sit here for another 10 minutes. Yep. Okay. So the round is open. You just need to refresh round 1 if you can't see it. Just refresh your screen and it will open the app. Beta shit. Yeah, we've got a whole lot of extra teams. We're not telling you. Function key to refresh a web page. F4? I thought it was F4. Control F. Okay, we got 13 of 20 tables in, so 7 more tables to go. If you've finished, please feel free to go out to morning tea, and I'll be back later with the results of round 1. Sixteen.
Saying Oliver, we thought about it, we could have put a slide after this with a 2-minute counter on it. So that would
Yeah, it goes, yeah. That's cheating. Are there any teams that haven't entered their results yet? 1, 2, 3. 3 teams.
All right, terrific. I'm on, actually.
Okay, make a decision, 30 seconds, and I'm going to shut it. You won't be able to enter any results for the whole day. That one over there, and those 2. No. Check.